Are you selling in Canada? Here's what you need to know about the GST and HST rules. Hi, I'm Richard, co-founder and CEO of Safari Star, and in this video we'll be looking at the key GST and HST requirements in Canada, when they were introduced, who needs to register, standard rates, the registration process, and the risk of non-compliance. Canada introduced the Goods and Services Tax GST in 1991, replacing a federal sales tax. The federal GST rate is 5%, although some provinces combine the GST with the provincial sales tax into the harmonized sales tax, HST, with rates ranging from 13 to 15%. Other provinces maintain their own provincial sales tax, PST, charged separately from GST. Canadian businesses must register for GST or HST if their taxable revenue exceeds 30,000 Canadian dollars in any 12-month period. Small suppliers below this threshold do not need to register but may choose to do so voluntarily. Non-resident businesses supplying digital services, e-commerce or goods to Canadian consumers may also be required to register if their Canadian sales exceed 30,000 Canadian dollars per year. Canada doesn't require fiscal representation for foreign businesses. However, non-resident businesses often appoint a Canadian tax agent to handle compliance and communication with the Canadian Revenue Agency, the CRA. To register, you typically need the following details. Your company details, so your company name, address, and legal structure. Proof of your trading activity, such as contracts, invoices, or marketplace agreements, as well as the identification of the directors or the company owners. Registration is done through the Canadian Revenue Agency, the CRA, and usually takes a few days or up to 2 weeks. Once approved, you will receive your GST or your HST account number. When it comes to filing and compliance, GST or HST returns can be filed monthly, quarterly, or annually, depending on the turnover. Returns are filed electronically via the CRA My Business Account portal. Businesses must also collect and remit GST, HST on taxable supplies made in Canada. Failure to register on time can result in backdated GST or HST liabilities, penalties, and interest. Penalties for late filing can be up to 10% of the amount due, plus daily interest. Persistent non-compliance may result in restrictions on your ability to do business in Canada. So to recap, Canada applies GST at a federal rate of 5% with additional HST rates in some provinces. Businesses must register if their taxable revenue exceeds 30,000 Canadian dollars per year, and non-resident sellers must also register if they cross this threshold. Compliance requires timely filing of HST or GST returns via the CRA service. Thank you for watching this video. If you found the content useful, let me know in the comments, and don't forget to like and subscribe for more updates on VAT and international compliances.